This is a review of the weekend trading report for August 10th, 2013. We have a market that is still in bullish quiet conditions on an annual basis. Looking at weekly RSI 14, we're at 68 out of 100, or the high end of neutral. On a 10-day basis, using the 10-day NDX, we're at 52 out of 100, so right in the middle of the 10-day trading range. Looking at elements of the market mosaic, percent stretch relative to the 200-day moving average has lost ground back to 10.36%, which is white bullish, so not as strong as it has been. The slope of the 50-day moving average remains yellow neutral at positive 0.31%. ADX has pulled back to 17.9 with bulls slightly in charge, but no evidence of trendiness in this market over the last 14 days. ATR percentage remains very quiet at 0.74%. The risk index, which is the 30-period moving average of the VIX divided by the 10-period moving average, is at 1.06, and since that's greater than 1.0, we are still in a risk-on condition. The z-score of that value of 1.06, when you look back over the last 5,000 days, is at 0.65. This is the 90-day time series of it on this little histogram. You can see that we pulled back from a 2 z-score. Of interest is that all the great big VIX spikes of the last 3 years have occurred after a pullback from very quiet conditions, and when that risk index has crossed the zero line. We're starting to approach that territory, and time permitting, I'll show you a graphic representation of that when we get into looking at individual symbols. No change to the blended monthly rebalancing portfolios, with reevaluation due on or about 1 September. In ETF2, the theoretical exposure is at 70%. The model portfolio remains at 80%, and that's the link to the YouTube channel for some interesting case studies on an ongoing basis. Taking a look at the blended monthly rebalancing leaders now, just to get a current snapshot halfway through the month here. Small caps, tech, mid caps, followed by the U.S. large caps. So it's all U.S. all the time, with the risk on symbol still at the top. Half the 13 ETF portfolio still on a cash position. That represents generally the internationals plus treasuries. Looking at the key leaders in the 32 ETF portfolio, scrolling up. The long-term leaders are still at the top: discretionary and healthcare sector spiders, then small caps, then the financials and industrials. Kind of a remarkable performance by those broad sectors. And again, about half that portfolio is on a cash signal, and that being generally the commodities and the internationals. Back to the market health check. Slope of the river is up. Price has just recently come back into the river and is approaching the midpoint, the Bollinger Band mean. This horizontal purple line at 170 I'm treating as a recent swing high. We really want to see price close higher than 170 and then find support off of this level at 169, 168 to continue the march northward. It's been going basically sideways for almost 25 days now, so it's had time to make that move. Failure to follow through is information, and the longer that kind of coasts here, the worse that is for the long-term view. You can see that the 200-period moving average now crept back onto the screen as the distance between price and that rising moving average is starting to diminish a little bit. The volatility remains quiet. You see the river compressing here. Thick black line in the middle is the slope, or is the 30-period regression line. The positive slope is reflected in this time series. Anytime that is above this dotted line, then we know we have a positive slope, and that's generally favorable for the market. But you can see the slope plotted here as a time series. This was as steep as it could get, and as it has been over the last 6 months, and now is decaying as this price travels sideways. Not a concern yet, but it is an indicator of when we get to extreme conditions about when to start making sure that you've locked in your profits, and that's what this rollover of the slope function told us back here. You can see the last time that it rolled over from this level of steepness, we had 30 days of really crummy price performance, including this sharp sell-off here, about an 8% pullback. We haven't seen that yet, but that's the potential. As the volatility, that risk index rolls over and comes back towards the zero line, we're getting a little more volatility in the market. That's where you see these kinds of sharp downward moves reflected in these big red candles, these big one-day red candle moves. We haven't seen one of those really since middle of June, and so that risk index is alerting us to the possibility of that kind of system shock in the short term ahead. We've pulled back on the Williams percent R from overbought to midpoint, and our intermediate warning symbol here, or signal, the percent price oscillator, continues to have the jaws open to the downside, more about the downward pressure than upside potential. That's how I'm reading that. Finally, back up at the top, the ADX. Just take a quick look at measures of trendiness. And so what we have is the ADX is less than 20 and decaying. Bull's still slightly in charge, but there's really a sideways mucking around right now. There's no upward or downward trend evident yet. The good news is that whichever way it breaks, there's room, according to ADX, for an extended move, much like the one we saw here, and like this longer move here. So that can happen in either direction based on that ADX reading. Moving on. In the ETF database, the regional model, 3 of the symbols are on cash signals and 7 are on a buy. This should read 70-30, clerical error. Still bull quiet. The S&P at 62 is better than the rest of the world at 57. Inside the U.S., the strength is in the risk on of the IWN and MDY, which are the 2 strongest sectors. The weakest are Latin America and Asia, less Japan. Inside the sector spider extract here, the strength is really still financials, healthcare, and discretionary, which have been the long-term leaders over the 6 months. World market model. There was a question somebody asked me, hey, China doesn't look very strong. How does get to 84? That China is based off of a symbol PGJ, which is probably not the best representation of the broad China market. However, it does represent a thin slice of elements that are poised to do very well in the current economic policy conditions in China. So PGJ is tradable on the upside. Thinly traded, it's true, but well postured for continued success, and it could buck the trend of relative weakness in the rest of China. I'm going to change the symbol back to a more broad-based reflection of the Chinese market in order to be consistent, but that's the answer to that question. Meanwhile, the U.S. market, all above average, especially in the small caps. Everything else, Western Hemisphere, looks weak. Japan and all of Europe are above average, and anything Europe country-wise is pretty good. In the business sectors, the U.S. is tied or better than all their global counterparts, so the strength remains inside the U.S. Looking at the ETF 30 database, we've got no change to the leaders in the alternate energy, and we've still got banks, biotech, small caps really thriving in this environment. Netherlands is a green on strength and white on consistency, so that indicates recent relative strength. Oil remains strong, as does this industrial producers index, showing green and white. So that, I think, reflects some of the growing strength in the industrial sector as well. That is, we're also going to see that reflected in get the Dow 30. We're going to see that Alcoa and Caterpillar have moved off the bottom, replaced by IBM, and so perhaps we're going to see some gains ahead in the industrial and basic industry sector. Merck is also of interest with green on strength and white on consistency, and then some relative weakness creeping into Home Depot, Microsoft, and Disney based on the fact that they are white on strength and green on consistency. Hewlett-Packard remains at the top of the stack, followed by Cisco, Boeing, United Health. All good news stories there. Among the financials, the Bank of America looks to be an interesting one if you want to continue to focus on financial sector strength. Shifting now to the daily report. I'll just highlight Latin America is on a overreaction short signal. Now, if we see market weakness, then we've been treading water for about 20 days, or 15 days, excuse me. If we see a sharp downward spike, then that tells me that Latin America is definitely the place to go. It's been the weakest sector for months, and so if we saw weakness in SPY and ILF failing faster, that would be the natural place to pile on the short side. Couple signals in channeling for financials in the diamonds, and 5-day down in oil, triple screen in small caps, and some 551Ws in small caps, mid caps, travelers, and Pfizer. Handful of good signals on the auto framer based on the 2-to-1 reward to risk. You can see just how quiet in volatility the market has been using ATR percentage as the measure here. That's when it's ripe for these kinds of volatility spikes. That's what the early warning indicator is telling us over here, to make sure that we are prepared for that kind of a shock move. Dow 30 tactical summary. Couple dojis. We got about a half a dozen that signal on the RSI2 of less than 10. And when that lines up with these auto framers, that really tells us that a reversal here has potential for some good moves. So I'd be looking at IBM, ExxonMobil, Chevron, Travelers, Verizon, all as good potential. You see the strength on Friday from Alcoa and Caterpillar as part of that perhaps cycling beginning over into industrials. Let's keep an eye on that one. If they start moving off that bottom, it's a long way back to the top, and that could be a repeat of that Hewlett-Packard good news story. Inside the ETFs, fewer choices, still a couple on a favorable reward to risk ratio using the auto framer, the VIX, U.S. real estate, the Russell Midcap. The Russell Midcap is also a 551W as their small caps. I like small caps here as a triple screen and 551W and 3.1 frog quality numbers. That's not too bad. Nothing fired on the RSI2. Looking at a summary of the auto framer, some of the usual suspects that we've already mentioned, ExxonMobil, IBM, Travelers, all look to be pretty favorable. Looking at the market mosaic, this last thing I'm going to look at here is this market going sideways. Has the polynomial trend line is rolled over. That one is faster than the straight line linear regression. Polynomial regression is quicker and more adaptive. You see it's already rolled over and crossed to the downside. That gives us a little earlier warning than the slope of the regression line compared to its own 10-day moving average, but even that has signaled a crossover well outside the one standard deviation above the 6-month average. So that's always been a reminder to pay attention to reversals in the broad market here. You can always see that happen with respect to the 200-day moving average. And here's the time series for that regression line slope study. You can see that it had gotten as steep up as it has been in 6 months, and this is a natural rollover. Now, doesn't mean that it's going to repeat this move. This led to a 10% sell-off. That's this move here, but that's what it looks like at the front end. So the tide in the market is shifting. Those are just some quick reference charts. I'm not going to talk to any of those. Yeah, I want to shift now to the look at some charts of interest. I want to just take a look at some issues on the 2 week, or I'm sorry, on the 2-hour chart here on the VIX. I want you to notice this. This is about a month worth of data, and on 2-hour bars. And this extraordinary sell-off has occurred while the market was going to those very quiet, the bullish quiet kind of a move. And over the last 10 days or so, we've had a number of, we've seen that kind of bottom out and find support for the VIX down here. And so I've set up some trade frames. Let's see what we can see here. So these purple lines represent, on a swing trade basis, what I consider to be reasonably achievable moves over the next 5 to 10 days. Based on previous support and resistance. The green lines look to me to be potential signals for entry, with red lines being support or stop and reverse into XIV if we see a continuation of the lack of volatility. When we dial in a little bit closer, I just want to show a couple purple lines for profit target. This is where I'm drawing support levels here and here, with potential entries above 1460 and above 15, with the idea of getting up to 1575-ish or 1650-ish. All of those look reasonable. Now, if we now dial that in and look at, or let's dial out and look at a daily basis and see where those lines look for us. If we take a look at about the last 2 months, you can see the context for that large volatility sell-off and the stability it's finding here north of 14, and the potential for these kinds of tall moves in VXX, like this one. You get some sharp movement days like that, and this is postured. This is so quiet that the possibility for those kinds of tall moves is certainly there. And those purple lines reflect what that could look like on a daily basis over the next 10 days. So now if we zoom in to 3 minute, to the trade frame on 3 minutes now. So this is about 2 days worth of data. And the important one here to me is I see price above 1465 as being viable. You could wait till 1470 if you wanted. I'm satisfied with a move to 1465 to catch it on the way up, because I think if we get an open and it goes through 1465, that it'll blast right through this price level of 1470. And I want to be on board that train. At the same token, violation below 1430 tells me that it's the the lack of volatility is in play, and then XIV would become the reasonable move. Let's see if we got any other items of interest. Take a quick look at Alcoa, and I like to start with the 2 hour. Just so we can see what's happening kind of on swing trades. You can see Alcoa has been in a downturn. It's already had one nice move up off this low around 7.5, has moved up to 8.25. That's one sort of move. This 2/3 retracement, and now again a sharp spike here. Certainly anything above 8.25 is going to suggest long-term gains. But this was a pretty sharp move to be cautious with. I'd buy it. I'd be willing to buy it above 8.25, but I'm reluctant to buy it here until it shows me actually some more of that strength. Let's take a look at Microsoft. Microsoft triggered a swing trade. If you will recall from previous weekend reports, we had set up this trade frame inside here, and we were willing to buy it if it got north of 350 or 32.50, excuse me, 32.25, and it did that on Friday, and so I'm looking for profit targets up here at 33.75. I think it could get to 35. And then return back to 36 as the sort of the, if it really performed well. If we saw that, then what that would suggest is that this sell-off here was an overreaction against what had been a market leader. And so this is the first sign of it starting to vote back up instead of further failure. So I actually like Microsoft as sort of a value play in the swing trade time frame, if you will. All right, that's everything I wanted to cover for symbols tonight. I'm a little off my game. I'm kind of upset about the soccer club, so I have to process that emotion. So I don't have very many symbols that I want to trade other than the usual suspects. So if you have any symbols you'd like me to take a look at before we call it a night, then please go ahead and post them in the question or in the chat, and I'll take a quick look at them. All right, Tesla. Start with the daily chart. Runaway good news. No upside resistance. I think you have to own it long term as long as Elon Musk is in charge out there. What's not to love about that chart? On a daily basis, you wish you'd already owned it, but so now the question is, can you buy it here with 2-day, one big up day and then a second day inside day with no new follow through, a 2-day response to their economic news that they weren't losing as much money as they thought. They're actually making some sales. If you do, you have to at least respect a stop down here about 123 below the Bollinger Band mean. I don't think you can buy it blind. I think you might want to wait to see a price above 159. I could make the argument for support here at the just below the edge of the river if you're looking to get a bigger position size. Long term, though, I mean, I think you have to like Tesla as one of the few companies that actually seems to know what they're doing in the alternate energy and electric car business. You know, full disclosure, my sister-in-law and brother-in-law work for SpaceX, and they got nothing but praise for Elon as a leader and a visionary and a genuine good guy. So to me, this is speculative money. I think long term there's a good argument for it. I don't know what TRLA is, but I'll see if we can add it to the list here. Let me take a look at silver next. Someone asked for. This is a very favorable chart in silver using our framework. Failure to fail further. Plus we have a series of higher lows. You know, 1, 2, 3, 4 higher lows. Taking out this previous swing high, about 19.25. That would suggest it goes up with technical levels of 21 and 21.75 looking feasible. We had the regression line crossover outside the river here. Has held support at the Bollinger Band mean and is now leaving the river. I absolutely think you can buy it on more momentum. I have been buying silver down in this area for exactly those reasons. So, in the interest of full disclosure, I like that the 90 period regression line is rolled up as well as the 30. I like that the river has gotten narrower as volatility has declined. So I like this Bollinger Band pinch here, the quiet channel. The absence of volatility is a good thing, so I think silver is attractive here. Let me see if I can add TRLA, see what that is. I have no idea what it is. Trulia Incorporated. So on the basis of absolutely no knowledge about what it is, I'll just look at it from the lens. I'll start with a farthest out view. Looks like a relatively new company with a growth that's already had one explosive growth phase, along, a year-long. I guess let's see, that's weekly. Looks like about 6 months of just sideways, quiet channel kind of a approach. Obviously, some hot money chasing it. Notice the volatility. Volatility is expanding. It's outside the river. That's the horns of the dragon. If I owned it from anywhere back in here, I'd make sure that I didn't lose any money. I didn't lose any profits. I'd be cautious about this. The horns of the dragon tell us, that's a 10% pullback or 8% pullback from those little, those peaks where price was not able to resume. So some concerns already on that it may be overdone on a weekly basis, so we'll dial down to the daily. looks a little more reasonable in here. I don't know what caused this spike. The pullback held support at the river and has showed 2 days in a row of gains. So could you buy more at 46? Probably. And I'd have my stop at least here for position sizing purposes. You might treat this as a reasonable support level around 37.5. Or if you were more aggressive up here at about 41. This is sort of a typical, so we're on a daily basis. This is a typical pattern of no follow through. One earnings announcement or a surprise, and so you get a burst of hot money chasing it after a long period of time where it wasn't doing anything. Is this the new fair value of it? Could be. If I owned it from down here, I would make sure that I wasn't losing any money less than 30. I would lock in 36. I think you could buy it if it gets above 39 as an idea of it playing more momentum. But really, what in our framework with the RLCO, what you have happening right here is regression line crossover outside of the river, and the next target is the Bollinger Band mean. So what that says is that somewhere out in here, this would not be unusual. Now, to be fair, we don't, that's if you do a straight line projection of the Bollinger Band mean. But if this continues to decay, the Bollinger Band mean will start to roll over, and so now I sort of project a decay on the Bollinger Band up around here. So to me, a price of 33 would be absolutely normal. So if you bought it at 38, a pullback to 33 represents a 20% loss. So, against a who knows what you would use as an upside target. And it's the upside of this thing is that it's a runaway growth stock. They still don't have earnings to justify, unless you want to say, if I'm willing to accept $6 downside risk, you have reason to believe there's $12 upside for a longer term position. So not in my view. I mean, there's been 10 days where nobody has believed that it's severely undervalued here. So why would you think that there's $12 on the upside when a reasonable technical rebound back to or pull back to 35 is, or 34 or 33 is wouldn't be surprising. So that's my take on Facebook on a pure technical basis. Okay, that's everything I want to cover tonight. More work for me to do. Thanks for your kind attention. We'll see you in the chat room, and I'll post the transcript of this in the YouTube channel shortly. Usually takes about an hour to process. So thanks for hanging in there. Pardon my language on the earlier part of the webinar. Cheers.